I don't know about you, but I want to be financially free. And while there's a ton of naysayers and haters out there, I'm dividend investing my way to a very freeing financial finish line. And today, I want to show you firsthand how exactly I'm doing it by diving into my dividend portfolio, breaking down all of my dividend income that I received for the month of August, and closing out with an inside scoop on my dividend income tracker. So, are you ready? So first and foremost, I just have to say it. Where in the world is all of the time going, and how are we already in September with just a few months before we kick into gear into 2025? Now, as I think about that, it's just a little crazy to really think about how little time we have in life on Earth, and that's why I'm eager to get to financial freedom. And thanks to dividend investing in this financial freedom journey, there is light at the end of the tunnel. So I don't want you all sitting sidelines. Join me here on the channel and of course on this financial freedom journey. It is all worth it. And to prove my case, let's dive into GetQuin, a portfolio tracker that I've been using now for the past few months, which by the way, I strongly encourage all of you to actually check out and measuring your own progress in the stock market, because after all, as we say, what gets done in life is actually measured. But nonetheless, here we are, whereas we can see that this week wasn't too friendly towards us investors as we dipped into the red with my portfolio sliding to just above $200,000, sitting at $201,874.98. Now, to be honest with you, as of late, I haven't really been making any major investment moves in terms of individual stocks, but I have been steadfast in dollar cost averaging my way into 2 ETF positions. So I want to explore my portfolio with you by clicking to the allocation tab and clicking to see my portfolio's breakdown, where I remain with 49% of my portfolio invested into individual stocks before we then get into ETFs, which I have been growing pretty aggressively, currently sitting at 26.3% of my portfolio, followed by 14.7% of my portfolio loaded into mutual funds, and a sizable cash position here just under $20,000 and making up roughly 9.8% of my portfolio. Of course, I bought some shares of 2 ETFs this past week for $1,000 and something change. I'm gonna have to replenish this position so it's back over $20,000 this week. Now, I've mentioned this before, but thanks to our economic environment, I am in fact using my Vanguard settlement fund like a bank account, whereas I'm stashing a lot of cash there to collect on an ROI from Vanguard, as it pays about 5% in terms of interest to just hold my money with treasuries and bonds in that settlement fund, which is just something you may want to check out in your own brokerage account because it's better than letting your money collect dust in a bank account. However, let me now take you to my sector breakdown, where you're going to see that I'm actually predominantly invested into tech companies, coming in at 46.8% of my portfolio's weight. Now, that may be surprising to hear from a dividend investor, but everyone has to keep in mind our own individual profiles as investors, whereas mine is the fact that I'm 30 years old, can afford to take on more risk, and enjoy the growth of many tech stocks over the years. But also note that I balance out here with healthcare orientation, coming in at 12.8% of my portfolio and roughly 10.5% invested into consumer discretionary, meaning that's about 23% of my portfolio that's dedicated towards more safety, before completely spreading into other sectors. And if you're questioning my positions, let's go ahead and click into my portfolio's foundation here, where we could see that I remain strong in Vanguard's total stock market index fund, coming in at nearly $30,000, making up 14.7% of my portfolio. Following that, I have Apple, my biggest individual, most lucrative position here, coming in at 12.9% of my portfolio, which equates to about $26,000. And then we have more safety here with an ETF, VTI, which is once again the total stock market that I will eventually work to just combine with VTSAX. And then I think the biggest change here when it comes to my portfolio comes right down to this ever-growing Vanguard Information Technology Fund, ticker symbol VGT, which now makes up 9.9% of my portfolio, and it's giving me plenty of exposure to growth stocks that are far beyond my scope of expertise, yet powerful opportunities. Thereafter, we have the cash position that's once again coming in under 20 grand at this point in time, or 9.8% of my portfolio. We have a Google position here that I've really beefed up this year, now totaling about $19,500, weighting in at 9.6% of my portfolio, followed by Johnson & Johnson, just over $16,000, and kicking in here at 8.32% of my portfolio. But then we're back to it here with safety with Vanguard's S&P fund, ticker symbol VOO, at a much smaller slice of the pie at 4.7% of my portfolio, before we have Realty Income, Visa, Lockheed Martin, and the remainder of my portfolio. Now, I'm going to jump back on screen with you before covering all my dividend income and just share with you, currently I have 18 positions. My goal here by the end of the year is to literally cut that in half, with the complete belief that a concentrated portfolio will ultimately get me to my goals much quicker, all without sacrificing dividend income. But speaking of dividend income, this past month, I have had just 4 companies pay me a dividend, and we'll click back into GetQuin here to see the dividend section. And we want to go ahead and click into 2024 coverage, go down here to actually scroll into August, where we're going to see that we've had payments from Darden, Apple, Realty Income, and Starbucks. But I actually want to discuss each of these payments with you in greater detail, and moreover the companies themselves, for you to understand my current thoughts on each of them and whether or not they are actually a buy, sell, or hold at this point in time. So we're going to go ahead and get to it with Darden Restaurants, ticker symbol DRI first. Now, Darden is a restaurant operator, for those of you who don't already know of it, operating some of the most popular brands in America. We're talking about the Olive Garden, Longhorn Steakhouse, the Capitol Grill, or their seafood joint Eddie V's. Personally, I bought into Darden back in 2020 when restaurants were crushed and everyone was expecting the world to really never reopen. But I've kept my conviction for Darden, and it has rewarded me well over the years. As a matter of fact, I was just sent $19.02 for holding 13 shares, thanks to Darden's dividend yield coming in at 3.55%, which has been maintained over the last 3 years, growing by 23% year over year. Now, truth be told, I did trim this position down not too long ago. I only hold 8 shares as of now, but I do believe that Darden remains a buy at a current share price of $157 per share, PE at 18.5. Now, if we click into the 5-year, you're going to get a taste of Darden's power here, up over 25% over the last handful of years, and I do believe Darden will climb back into that $170 range, but it's going to take some time as interest rate cuts are just around the corner. Therefore, I would say it still appears to be a buy in my book if you're interested. But speaking of a stock that really does need interest rate cuts to kick in, let's talk Realty Income, ticker symbol O, which has been and remains the most dominant net lease solutions real estate investment trust, that if you are interested in real estate, you should own this stock. As of right now, Realty Income has been aggressively expanding with its real estate portfolio, now topping over 15,000 properties in and outside of the United States, with over 1,500 clients at an insane occupancy rating over 98%. This is all just to say it's a very moat-worthy REIT. And of course, as a dividend investor, it's a gem in my portfolio as I hold 114 shares. I was sent $30.14 thanks to this dividend yield coming in at 5.06%. That continues to steadily grow by 5%, and of course, maintaining a 55-year strong dividend track record. However, the question is whether or not it's a buy. Personally, I'm not interested at its current share price hovering around $62 per share, but one could in fact make the case that once interest rate cuts hit, that share price will soar back up into that $70+ range, pushing maybe around $75 per share. Now, investors, I want to cover 2 more dividend stocks with you before actually getting into my personal dividend income tracker, but I want to take just one moment to ask you to join me here on the channel by subscribing. As I see this channel continuing to grow, well, it is actually making me put more of a focus on the channel. So join me, and with that, we'll build our financial futures together. And while you're at it, go ahead and tap on that thumbs up button just to let me know that you gain value from this video, and I'll make more content just like this. With that said, let's get to it with Apple, ticker symbol AAPL, which, as you saw, was my largest individual stock position in a power player that honestly I'd bet on any time. Now, I want to keep it simple with Apple because you all know it, but I'm going to just share with you that while everyone thinks this is a dying investment, or dying company rather, because there's nothing new in the pipeline, I think it has a major stake in our future, both near and long term. And I'd argue or make the case for Apple AI, and we're soon going to find out, but either way, Apple's hardwired into our society, making revolutionary advances to keep its position in the Mag 7. So I'm long on Apple, but its current share price topping $222, well, I'm simply actually just a holder of the shares that I already have, believe in that future, and think it's only going to get greener and greener. Dividend income wise, I received $29.44 for owning 117 shares, and thanks to that dividend yield coming in at 0.45%, which has been growing quite impressively by about 9% year over year. Now, my last dividend paycheck actually came in from Starbucks, ticker symbol SBUX, which I know everyone already knows as the coffee queen, and with major news recently of Chipotle's Brian Nicole joining the Starbucks team, well, it's had every investor rooting for it once again. But I believe that Starbucks will be a position that I honestly won't be hanging on to forever in my portfolio. Clicking into the stock chart here, I want you to take note of the Brian Nicole effect, if you will, but time will tell whether or not he can truly turn this company around. I would love to know your thoughts on it. Comment down below with them. But if it is the case, I would imagine that we're not going to be in the red for long, and over the span of time, we're going to get more green. In terms of dividend income, for just owning 8 shares, I received $4.56, which is actually only enough for a Dunkin' Donuts coffee. But regardless, that Starbucks dividend comes in at a strong 2.49% yield. That leaves plenty of room for growth, as we can see an average growth rate there of 17% year over year, while Starbucks has remained on a 13-year growth streak. And finally, to end the month, dividend income came in from the settlement fund, which totaled out to $61.49, making for a August grand total of $144.65, which is not too shabby. Click into my personal dividend tracker with me, and we're going to see that while I didn't outbeat last month, then again, August has always been, well, a lagging month for me. Nonetheless, we did outbeat last year's dividend income total there around $87, and now we are sitting at $1,663.47 in terms of dividend income for the year, so about to smash through another annual dividend income record. Now, investors, that's my August update for you, but I now have to know just how much dividend income you brought in this past month, your top performing or top paying dividend stock from the month of August, and what exactly you've been up to. So comment down below to let me know. Be sure you're subscribed to the channel to never miss any updates, insights, or the alike, but you can certainly discover more of all of that right here, and I'll catch you in the next one.